we'll see. So how significant is this?
Well, it's interesting for sure, and it's something that we've been following the potential or the possibility of it happening for quite some time. Of course, Alibaba a decade or so ago wanted to list in Hong Kong, couldn't get the proper rule changes. It listed primarily on the New York Stock Exchange in 2014. Of course, had its secondary listing in Hong Kong in 2019, but still, because of all the institutional base in the United States, volume on BABA shares have outpaced 9988 in Hong Kong. But to move this primary listing to Hong Kong, potentially, Alibaba says, by the end of this year, would essentially make it a dual primary listing for Alibaba in New York as well as in Hong Kong. What would that do with a dual primary listing? Well, the primary listing here in Hong Kong would then allow it to join the Stock Connect programs that Hong Kong has with Shenzhen and with Shanghai and broaden the investor base. Obviously, it would allow mainland investors to directly invest in Alibaba rather than going through the primary listing, obviously, in New York, or the secondary listing, which is not connected to the Stock Connect here in Hong Kong. So that's good news for mainland investors who would want to get into the Alibaba story. Now, at the backdrop of all of this is the uncertainty towards the U.S. traded shares. The stock code, of course, is BABA US. Those shares, like 250 other Chinese companies that are listed in the United States, are under quite a bit of uncertainty because of the SEC, the Securities and Exchange Commission's push to get Chinese companies to supply their audit reports. That, of course, is unresolved at the diplomatic level between China and the United States. Been rumors of some sort of deal coming through, but it is a cloud of uncertainty over the future of those listings. Potentially, I'm not saying that this is going to be delisted because of this dual primary listing for Alibaba in Hong Kong and New York. Doesn't necessarily mean that Alibaba will delist, but it's interesting in the fact that Alibaba could potentially be forced to delist or voluntarily delist from the New York Exchange.
It's interesting timing from a lot of different sort of angles, right? Because we know that Chinese equity markets, the outlook is pretty murky. This kind of coming home listing, we'd heard from the HKX CEO suggesting that at least the dual listing will be quite a popular shift for a lot of Chinese firms.
Absolutely. I've talked to Nicholas Aguzin, the CEO of the Hong Kong Stock Exchange. Gucho is his nickname, obviously, in the investment circles. And he has told me that this is going to be a driving pipeline for the Hong Kong Stock Exchange. We all know that the IPO pipeline here in Hong Kong has dried up a bit because of regulatory issues, because of the slowing Chinese economy, and various other reasons, obviously. But that long term, the pipeline looks good for the homecoming of many of these Chinese firms, whether it's DD or others who look to tap into Hong Kong, but not just Hong Kong, the stock connects into the mainland. It is going to be a driving trend, especially if there's going to be increased SEC security probes into Chinese companies, as well as Chinese government probes, like what happened with DD, essentially forcing the delisting in the United States on national security and data security issues. So this will be likely a driving trend, and Alibaba looks to be at the forefront here with a proposed dual primary listing for Hong Kong and then, of course, New York for now.